Hello everyone and welcome to the DashCast, where we go about finding the most interesting people in business, finance, and cryptocurrencies. On this episode of the DashCast, we were very fortunate enough to have David Morgan, the founder of the Morgan Report. On this episode, we not only dive through his specialty of commodities and energy markets, but also get to get some insight into his years as a trader and investor in a variety of different markets. Our sponsor for this podcast is TaxBit. The 2018 tax season has officially begun. TaxBit automates your entire tax filing process by linking up with your exchanges and wallets, running your transactions through their tax engine, and auto-generating all of your tax forms. 2018 was a tough year for most crypto users. TaxBit will help you recoup some of your losses by producing the tax forms you need to claim your tax refund. Sign up today using the promo code DATADASH to receive a 10% discount and a 100% money-back guarantee that your taxes will be taken care of this tax season. What's going on, everyone? My name is Nicholas Merton here at DataDash, and today I'm very fortunate to be sitting down with an individual I've been keeping up with for a while, David Morgan, who is the host over at the Morgan Report. He is an individual who's been featured on CNBC, Fox Business, a variety of media outlets, and like I had mentioned, I've been a fan of for some time, watching people like him and Mike Maloney. So David, thank you so much for taking some time to come onto the channel. Really appreciate it.
Well, Nicholas, thanks for having me, and it's always a pleasure to meet somebody new, and I'm very pleased. Thanks.
Yeah, I mean, it's really cool to be, I got to talk to Mike a while back, and I love definitely talking to some of the kind of commodity bugs who have been around for a while and on the YouTube space. I've always been an alternative media guy. But I really like your focus because as much as you focused on silver and gold and commodities, I think, in general, and precious metals, what you really have a focus in is energy. And that's been a topic we've discussed as well because it kind of comes up inevitably if you want to get a macro picture on economics like we do. We always focus on kind of where the state of the market is and where things are heading. So before we dive into that, I have a ton of questions I want to ask you. I definitely want to just give you some time to kind of explain your background and how you got into, the area of finance that you're in.
Well, I'll try to be succinct. I mean, my favorite topic, so I could talk for a long time. But, the coinage changed when I was 11 years old. So I took note of these, 90% silver coins being changed over to what we call Johnson slugs. And that had an impression on me that never left. But, at that point in time, being an 11-year-old kid, I didn't say, well, I'm going to grow up, I'm going to major in finance. And, I didn't have any of those ideas. All I did was like, these can't be the same value. That's the only thing I really understood or saw. But yet the adults around me didn't really pay any attention to it. So as things progressed, I was actually moved into, did real well in math, moved through high school, went into college, majored in aeronautical engineering, started working in the flight test field with the Air Force as a contractor on the contractor side. And I was real tight because I worked right with the test pilot community. I was a flight test engineer. And we would have engine runs out at the test site. And we would have long waits where we'd have to wait for, something to break. We'd have to wait for it to be fixed, sometimes a couple hours. So we sit in the truck and kind of BS. And one of the test pilots had this newsletter. And I was talking about the economy. And he was reading it to the other pilot. And I was all ears. I was like 21 or something. And I'm like, holy moly, this is like the truth about the economy. This is what I knew about, the coinage. I'd studied quite a bit on my own, actually. And so I was fascinated that there was, at that time, alternative media, you might call it, but, no internet. It had to be by snail mail. You had to somehow be tuned into these people. So I started getting interested in what you might call the alternative, or what's the other word? Anyway, what do you look at it differently? So I started looking at the whole newsletter industry and started attending lectures and events and subscribing and that kind of thing. So I really got turned on earlier than that age, but that was kind of the catalyst to really get me started. And once I got involved with it from an investor perspective, I really felt my heart being tugged that this is really what I want to do. And that did take place further down the road. So that's probably a long explanation of my background, but it's passion. I always wanted, I'll say one more thing, we could get to the next question. So fascinated by the markets. I was like begging my dad to let me trade stocks. Well, the rules are you have to be 18. You have to be, quote unquote, an adult, at least in California at the time. But there was an exemption. It's called the Uniform Gift to Minors Act. And my dad signed that flipper. So we start stocks at 16. So, I've been in the markets now for 50 years. So I'm still learning. So.
That's incredible, David. Well, I had no idea about that because you and I kind of share a similar story in that I started investing when I was 13. That basically, when the state that I live, you can have a joint brokerage account with a parent or guardian over 18, and allowed me trading stocks. And I used to actually, my first 2 stocks I traded were, I think, a medical marijuana company at the time because I thought that was going to be a big trend. This was way too early. But the other one was actually a solar company. So I was really interested and captivated by energy markets in general and kind of emerging tech sectors as well. So I same boat as you in that case, and I really like your point you mentioned on kind of alternative media. It kind of has a bad name to it because there can be some bad actors just like there is in the mainstream media. But the cool thing about it is it really provides like almost a buffet of different viewpoints and summarizations of data, and that's something that mainstream media only provided 2 or 3 viewpoints on that usually were quite similar. And you weren't able to kind of do the deep dive and digging in this case that you can do now with the internet. So it's cool to see different points of view. And that's why I keep up with, like I said, you and Mike Maloney and a lot of guys from different points of view in the space who do have slight variations. But I could go on a ramble about that and stuff. So I just want to say I appreciate that you share that viewpoint. So in this case, you talked about getting fascinated with markets. I'm curious to see, what captivated you about energy markets personally, because there's so many topics to talk about when it comes to markets. But I mean, when you're talking about Forex or equities in general, I mean, what got you really captivated on energy-based commodities?
Well, my mission statement is to teach and empower people to understand the benefits of an honest monetary or financial system. Mm-hmm. So basically, all my work has revolved around honest money, sound money, or at least truth in the financial system. I mean, in theory, a paper monetary system could work, but it never has. Whenever it's tried, it's failed. But it could, in theory, if every piece of paper represented an actual physical good or commodity or some service or some future service that was actually going to be there. But I'm getting off track slightly. But the point being is that 5,000 years of monetary history has taught us basically sound money is the only way to go because we can't trust human nature, but you can trust a piece of metal that's, 999 fine. So I was asked constantly by my people, my subscribers mostly, what else besides the metal should I be, looking at? And my pat answer was, a gentleman that no longer writes that I would recommend. I don't think I'd bother to tell him, but I thought he did a really good job. I subscribed. It was a gold and energy letter, actually. He covered gold and energy. Mm-hmm. And he did a really good job. So I would just basically tell anyone that asked me outside of the metals, where should I go? I should go to energy, get this guy's newsletter. You'll do fine. And as I said, that no longer exists. So as time went on, I was kind of asked by one of my now business partners to write an energy letter. And so I thought, well, why should I do it when there's got to be an energy letter out there that covers energy. In other words, everything, meaning mm-hmm. all the new, upcoming, even the far out ideas to the conventionals. And I really couldn't find one. Now, I'm not saying there isn't one. I couldn't find one. I'm pretty good on the net, so there may be one. So I delved into that. In other words, to go look from, conventional oil, gas, coal, uranium into solar, wind, wave energy, battery storage, energy storage, mm-hmm. and all of that. So we're covering everything. And most of the investments are conventional because they got the highest yields, they're easy to determine, and they're profitable.
Right.
Some of this stuff, and what I write about, we're only 3 issues in, so it's not like I've been doing this for a long time. I've been doing it in the newsletter industry for a long time. On the energy side, I haven't, been that long, but I've certainly studied it enough to do good recommendations. In fact, I think everything we've recommended so far is up. But anyway. It's the most important commodity out there. It's important as, physical silver and gold are, and commodities in general. Without energy, nothing happens. Absolutely nothing. So you have to have it. And if you look at the IEA, and I think they're a pretty reliable organization, and you look, and I do this in the presentation on the free webinar that you can see, and we'll talk about that in a moment. There's a gap going from roughly 2020, which is only a couple years out, where conventionals really aren't going to meet the energy demand, projected energy demand. So that gap has to be filled by what? Well, by solar, by wind, by the non-conventionals, the renewables, a lot of things. So that's what I'm looking at. But I'm also looking at how to evaluate these things properly. And so the second letter I wrote, I did a brief overview of energy return on energy invested, because most people with a finance degree like you and I would say, well, we got to get this much money. We could do it by debt financing or equity financing or split it, or we could do debentures or whatever. And, we know about the money side of it. We get this much money, we can build this project, and we can produce X amount of energy. Mm-hmm. But that's really not the way to look at it. The way to look at it is, how much energy do I have to put into this project? And at what point do I break even with that amount of energy that I expended to produce this? And where's the break even point? And from that point forward, how much energy do I generate and how long does it last? Because there is no such thing as renewable that's indefinite.
Right.
Well, the sun itself, yes. But to capture the sun and convert it into energy, how good is a solar panel? 20 years, 25? I don't know. And this wind thing, and I'm not against any of these things. Believe me, I'm for it. But I'm also for efficiencies. I'm an engineer, remember that. And so if something comes up like a great big propeller, which is basically what your wind generators are, they use a lot of REEs, rare earth elements, and the longevity of these things are not that good from what I've got from, let's say, higher sources. I'm not talking to the spirit world. I'm talking to people that don't like to go public on the breakdown factor, you might say, on these things. So you've got to look at it logically. You've got to look at it objectively. You've got to look at it as, are these alternatives really going to save us or not? And if not, how do we improve them? What adjustments can we make? I mean, look at the automobile. The automobile really, in a way, hasn't been improved that much from the Model T. Certainly, it's more luxurious and it's, quieter, and there's all these amenities.
It's still a car at
the
end of the day.
Freaking, piston going up and down inside a cylinder that's a very small tolerance. And those things heat up. It amazes me when you think about it. Sorry, I'm way off track here, but I have to say it. Yeah. Being, aero engineer is very similar to a mechanical engineer, except we do a lot more on airflow. But, when you think about an engine and how many times those pistons move,
right,
and they never stop or seize up, except very rarely, it's just sort of a minor miracle because the tolerances are very small. Anyway, back on track. So that's the way I approach this. Most of your renewables, sustainables, and all that, the energy return on energy invested is nothing close to what oil was in the early days, right, where $1 worth of, or let's say a unit's worth of energy would produce 100 units more energy. We're not going to see that again. At least, well, let me rephrase that. We haven't been able to see that again. I don't know what the future holds. Maybe, nanotech or some of the stuff that's coming along will do even better. There are alternatives that hardly one ever even talks about.
Yeah, I'd say the one thing to your point there, whether it's a good thing or bad thing, I think some people would write it off as good, but it's like with renewables, it's not as as an investment, it's probably not as good or as a speculative trade, because with oil markets, you have so much more velocity and volatility and price, and not to mention, with the rate of production through OPEC and Russia and the US and all these major countries, you can have such fluctuations and expectations, and that can lead to huge swings and supply and demand gaps. Whereas with renewable, it's very predictable to find what the price will be over time. It's generally been declining, and it's a matter of increasing efficiency. So those two are making it, I guess, an optimal choice in some cases. But as you mentioned, the energy that it takes to produce it in that case, it takes a long time to actually see the net yield on it. Whereas traditional forms of energy are pretty much instant in that case. We can see it right away.
Right, and that's that's kind of how the letter's set up. I mean, basically, my idealism is in the reports. I tease, or I shouldn't say tease. I suggest looking further into different alternatives that may be a solution. In other words, if I had my wish, and this isn't going to happen, I would be part of the solution to the energy dilemma. In other words, and that's why I put out what I do, because not only can you make money in this sector, but I want this work to be passed on to sons, grandsons, daughters, and that type of thing to get them to think about what these solutions could be in the future. Because let's just think for a second on a thought experiment, but let's say that Tesla did produce energy for free for everyone on the planet. Think of how different the world would have been from the early 1900s to now.
Mm-hmm. Yeah, I mean, that's incredible. I mean, I know I have a lot of probably people on the channel who've looked into the story about Tesla, not so much the company, but Nikola Tesla.
Right.
Yeah, I mean, the thing that I think you brought up earlier, that's so important, David, is that when people look at energy and the production of energy over time, it's probably expected that energy correlates with like growth in the economy. So as the economy grows, energy grows. But it's actually, from what I've heard through a few economists, it's actually vice versa. It's that when we produce an abundance of energy, when we produce more, and this shows how important it is and imperative it is to expand the quality of life, it's almost as if economic growth comes with that afterwards. When you have an abundance of cheap, available electricity. So I think energy markets are very fascinating in that case. And I'm glad to see that at least, you're open to the idea of like multiple markets existing for energy and not just commodities. Because I see people on one side or the other in that case. And I've always been like, well, wait a minute, these have their different benefits and they have their different places. And I think that's where you're seeing like a hybrid of the growth in natural gas and renewable energy sources as well. One thing I want to ask you though, David, that I'm very interested in, because from the videos I have gotten to watch from you, I haven't gotten to see if you've talked about this. What do you think about uranium markets? I'm very curious because we talked about it on the channel. I did a video called Uranium Fever talking about what I believe is going to be a coming potential bull market in uranium over the next decade. I'd love to get your point on it, whether you agree or not, and what you can analyze from the market so far.
Yeah, my personal beliefs on uranium are, I'm going to kind of withhold, but as far as, being objective, very bullish. This Rule 232 comes up. We just put an alert to the Morgan Report subscribers about it. And we do believe that uranium is the place to be over the next probably decade. We see a lot of opportunity there. We do have a couple that are featured in the Morgan Report. One is a very solid company. I know the CEO personally. And they also have a vanadium project. Vanadium is kind of one of the big buzzwords here. And it's what I call the commodity du jour. Some of these lesser known commodities that have a place in vanadium is primarily in steel, but it also has energy storage capability. So it could be used in the battery world as well. So bullish, absolutely bullish.
Yeah, I mean that's the thing. When we did our like analysis over it, it wasn't something that's like it's not so much on the demand side that it's growing like crazy. I think over the next decade it will be more in demand than what we're seeing right now. It just takes time for nuclear projects as they're based on reactors to be built, and not to mention I think we need to do more research to build better reactors. But I think it's going to be more on the supply side. We've seen huge cuts from Kazatomprom, from Cameco shutting down its biggest plant in Canada. I mean, this is huge supply cuts, and with the Japanese reactors coming back on, things of that sort, it got me really excited. But yeah, I'm interested to see where we see potential future commodity markets, because I think it's very rare, but it comes every generation that there's a next big commodity. And when you talked about the issue of storage of energy, that's huge. If we want to make electricity abundant through renewables, then we need to have the storage solution. That's still the biggest missing piece, and we're still using lithium, and it doesn't work that well.
Right.
So I'd love to hear more. like on that topic. Was it called valerium in that case, or I might be pronouncing it wrong?
Vanadium.
Vanadium. Sorry.
There's a white paper out there. I will explore it because even though I've read the paper probably 2 or 3 times, I'm no expert on it. But according to this white paper, it has potential to be better than a lithium. In other words, that's what we're looking for. As you said, we're looking for efficiency. I mean, lithium battery in your cell phone right now. I mean, most people that own, and almost everyone's got a cell phone these days. I mean, it's frustrating because these things only last so long, especially if you're, on a smartphone and you're on the net. I mean, it burns it up pretty quick. And then it gets in a cycle where it deteriorates, and we all know these things. So there's a lot of work to be done in the energy storage field, and we're just really starting to open that up now, where we're looking at different ways to store energy. I mean, you can actually compress air and use compressed air as an energy storage medium, and that's been overcome recently in the last few years by because it basically was inefficient until it was thought about. And then this woman, I think her name is Diane, it's an Oriental name, I forget, Fong or something. But anyway, she determined that if you sprayed just water into the compressor at the time, you cool down the air as it's being compressed, so you don't get the heat expansion. So, there's, you invent a better mousetrap. It's the solar panel that was made that now is 4 times more efficient than the original. And it's just a solar panel. It's just that people looked at with the design and said, you know what, this could be improved, or we could put another layer here, or we could use this material instead of this one, and and on it goes. So a lot of times the improvement, I go back to the automobile. I mean, it's still a piston engine, it's a lot different as far as speed and everything else. But the point is, it's still a piston engine. And the same thing with the solar panel. I don't know the future, but 10 years from now, it's probably still going to be a panel of some type. There's, in fact, I just wrote about the last report on the energy side about thin film solar. This is very big, where it's basically something that's paper thin that can work as a solar panel, which is obviously superior than something that's much bigger and bulkier. So there's a lot out there. I mean, I'm very optimistic about these new ways of looking at energy and capturing energy and transporting energy and storing energy. And if we could give everyone unlimited energy, again, thinking about the kind of world we would have,
it would be incredible. Yeah, I think it's interesting. I wonder if in my life I'll be able to see something like that. And it'll be pretty interesting if we just have an absolute abundance of energy, even in a world of 8 or 9 billion people in the next coming few decades. So, speaking of that as well, David, in this case, I'm a macro trader, as I mentioned before. I definitely like to think big picture, as you just heard me talking about, what I expect in the future in that case with uranium markets and what I hope to see for energy. One thing I want to ask you is, where are we in the macro picture of things? Like, where are we right now in, almost stepping into Q2 of 2019? What do energy markets look like to you right now? Like, where do you see oil and natural gas at? One thing that I do want to point to is that I was interested. I watched a video of yours a while back that actually did kind of change my opinion a little bit. Whereas I thought we could see oil go back down a barrel down to like the $20 to $30 range. I saw that you were sharing a chart that displayed the lack of new reserves being found in the oil and natural gas space. We're at some of the lowest levels in decades. So would you like to build on that? Maybe kind of talk about where you are at the moment?
Yeah, I mean, this, any topic you can find, dissent, you can find people that agree or disagree. And there isn't anyone out there, I think, that has absolutely all the data to be able to say it's going to be this exactly. But obviously, I'm studying the topic. I think we're at an inflection point. I don't think there's much downside to the oil market right now. Yes, there is an abundance of oil. I put it in quotation marks because the margin isn't that big, meaning that any new demand on energy is going to use up that available surplus, which is, again, pretty small. So let's think about what is the energy demand. And basically, it's infinite. I mean, not every human needs infinite energy, but the more that the more energy per capita there is, the less work they have to do individually. In other words, think if you had to transport, 4 people going to the airport from their house, and say it's a 20-mile trip, and you had to get, manual labor, you only had human energy. I mean, how much would that cost in labor, to be able to pull those people to the airport, or, and if you look at what a gallon of gas, which would do the same job, costs, $3. I mean, people don't understand how efficient the amount of energy is for amount paid. In other words, they don't consider that in a barrel of oil, there's something like, I forget the number, I'm going to make it up, but it's 150,000 man hours or something. I mean, it's an incredible amount of energy that you're getting for $70 or $68. So the point is, where are we? I got off topic. Is we are at a point where we are in a slight surplus. I don't think it's going to last that much longer. I'm not looking at a big run up in energy prices, by the way, not yet anyway. I think that we're at a point where we're kind of oscillating back and forth, where we're have enough, maybe not, maybe yes, maybe no. And there's so much work being done on the alternatives that this is kind of putting maybe a bit of a damper, I don't know if that's the right word, but a bit of an overhead resistance on the conventional market, because there are these breakthroughs coming through. There are more efficiencies. There are these mandates in California. Now new homes have to put solar panels on them and this type of thing. So if you look at it at a chart, I like to use the word indecision pattern. I mean, it's kind of just waffling back and forth. I do still believe in the basic premise in that lecture that, it's comingenergyboom.com. You can watch that lecture. And I do believe the IEA, I do believe that conventionals are going to be depleting, and we do need to make up that gap. And even if that's not true, there's still so much of the world that doesn't have electricity. There's so much of the world that could be supplied by solar, especially efficient solar. And if you really want to help, the poor, give them energy. I mean, that's what's going to help them more than anything else.
Mm-hmm. I think there was something Bono said or something. He's done a lot of like charity work, but the one thing he always stated was that if you want to really, pull people out of poverty, let them operate in free markets, let them actually do business and commerce. And I think that goes hand in hand with energy, because obviously markets need energy. And to your point, David, in this case, there's a few macro trends that I've picked up on, and you mentioned most of them. The factor of renewables coming in, that has sparked a lot of fear with the rise of electric vehicles, in the sense of thinking, not right now. I mean, I know, for example, where I live, Teslas are everywhere, but not everywhere in the United States. Not everyone's buying Teslas. So it's going to be, multi-decade, probably the next decade or two, until we see mass-scale electric vehicles just completely dominating the market. Along with that as well, we had mentioned just kind of the uncertainty about the surplus we have now. I think those are really the two bearish factors. But the one factor that people still don't kind of keep into play is that as people are, starting to move out of emerging markets, and they're starting to form as developing economies, predominantly, China now being one of the most top economies in the world over the past decade, as you start to see other economies follow in their footsteps, and you start to see wages increase as well. I'm curious to ask you, from my analysis, haven't been able to figure this out, does the energy demand increase as the individual rises to a higher level of living and standard? Because it would seem to make sense, right? Like that would be a correlation that would happen.
Right now, that's true.
Mm-hmm.
I mean, in the future, it could change. I mean, especially if we get, more efficiencies. And you also have to look at the other side, meaning that a lot of things in the tech world have come down to ridiculously low prices. I mean, if you look at some of the best stocks you could have had, 20 years ago, there were memory stocks, because memory was at such a premium. I mean, if you put a new chip in your Commodore 64 or whatever, and doubled the memory, you were spending, hundreds of dollars to increase the memory from 128 to 356 or something. It's crazy.
Yeah.
And that's not just in computers, but that's an example that most people know about. I mean, look at it in biotech. I mean, this CRISPR technology, to produce the genome was millions of dollars. And now you can get your genome checked out for a couple $100. I mean, so there's a lot of things that are out there available to the general populace that they take for granted, that's really were extremely expensive a decade ago, that cost, I won't say next to nothing, but very little in comparison to where they were. So that makes a better lifestyle for everybody, because the technology has been, let's say, perfected or perfecting, and brings the cost way, way, way down. And so you have this kind of a gift that you're given because you're living in this time frame that a lot of people, again, don't really even realize it. And so how much is the optimum amount of energy per person? I said infinite. I mean, that wasn't really true. I mean, obviously we all need a certain amount, but for everyone to be, let's say, Western standard comfortable, it would be an extreme increase in demand for what we have now. And the supply conventionally won't meet that demand. And why shouldn't everybody have abundant energy, especially if there's a possibility we can provide it for everyone?
Yeah, that's what I think about. We're going to have a 2 billion, 2 billion increase in world population. I would say I get close to about the majority if not close to the majority in the next 2 decades, is probably going to be close to the living standards of what we see in China or maybe Europe and the United States and Canada, somewhere amongst that, where you're starting to get formation of middle classes in these economies. And what happens when you translate that from America, which is just a few tens of millions, or I guess the West in general, which has about 1 billion people, and take that to the other 7 to 8 billion who are going to move into those income groups, that are going to be immersed in technology and be even more surrounded by technology than just probably their mobile phones. Like, that's something I think about. I think you're right in the sense that there's still so much energy demand that we're not factoring for. And as people move out of those lower income brackets, just how much that's going to have an effect on demand, and whether or not renewables will be able to keep up with that if we can keep increasing the rate of efficiency. And that's why, I've been open to the idea of not only renewables, but I like nuclear as well. And I understand that there is still room for oil and natural gas. It's kind of something that has to fill in until we get that perfect synchronization of efficiency on renewables. So one thing, we've been talking a lot about energy. I understand that's your specialty, but I want to talk a little bit about gold and silver, David. That's how I originally found out about you. One of the first videos I actually saw, I wonder if you remember this, because it was so long ago, was the Matrix Silver video that you did, where it was like a parody.
That one.
The parody play, because I'm a huge Matrix junkie. That's one of my favorite. I love sci-fi films in general, but that was one of my favorites. So you've been in the gold and silver space for a while, and I want to get some perspective as to where you think we are now, because I'll be fair, as much as I loved guys like you and Mike Maloney over these past few years, and I watched you guys, I always kind of was pretty confident that commodity markets weren't at their time, because it was a time for assets. It was a time for stimulation. The central bank was continuously feeding in money. And once I started to understand those mechanics, I was kind of like, I'm going to hold off on gold and silver. But this year in 2019, and partially in 2018, I finally have started to get a little bit optimistic. I finally have started to see the patterns building up. We've built really strong support. There's strong technical wedges and certain patterns that I keep an eye on that are starting to formulate. I'd love to know what you think right at this moment. Like, do you feel we're at a better state than where we were back in, 2011, 2012? Or, what's your thoughts?
Well, the metals basically got ahead of themselves. They had this parabolic rise, especially silver, that went from roughly the $18 level up to almost 50. And then gold peaked, that was the end of April 2011. And then gold peaked a few months later in September of the same year at like 1900. Mm-hmm. And anytime you get any commodity or stock, or even a market like the housing market or the real estate market that gets parabolic, it takes time to work off that excess. It's the market basically showing it's unsustainable. You cannot have anything go straight up forever, for a long time. Right. So anyway, I thought that the metals were going to rest and come back and fill, as they say in the commodities trade, and then move back up. And so far, they've basically gone sideways to down, especially silver. Silver's, as we all know, moved from 50 roughly to 15 or even in the 14. So, but getting to your question, yes, I think that my point is that it took a lot longer than I thought initially for this to back and fill and to gain some strength. And in the meantime, the cryptos came into the space. Mm-hmm. And so people are looking for alternatives to the conventional financial system, banking system, money system, et cetera. And here's a new one that's thrown at them. It's called cryptocurrency, the blockchain, distributed ledger, that purportedly is outside of the jurisdiction of, let's say, the banking elite. And so there's a lot of people that not only jump from silver, some from the gold into that space, but then that space caught fire, and you've got another parabolic curve, basically, of what happened in the Bitcoin market. So right now, where are we in gold and silver? I think we are at a point where we built the base back. I think all of the weak sisters have been washed out. I think we've got people that are solid enough to know that you need it as a part of your portfolio. The banks have been net buyers, the biggest purchases by the central banks, I think, in the last 10 years since last year. The gold is now a tier one asset starting at the end of the month. And silver is languishing, but it's common for these type of washouts for silver to lag gold. The ratio is about 85 to 1. But I think we're going to see a good year this year. I think you'll see the 1,300 level we're at right now today, broken through again and maintained. I thought it would hold the first test. I was wrong. It broke through, but it's retested and come back up through it. 1350, 1360 is really the big challenge. Once it's there technically, you see a lot of the algorithms start to switch to trading gold from the long side instead of from the short side. And once that takes place, then you'll see silver start to accelerate. Once you see the silver gold ratio in about the 72 level, that's a pretty good indicator that we are back in the bull market. And you could wait. You could wait until that long. Now the prices will be higher. What people don't understand about investing is you don't have to catch the exact bottom or the exact top. That's an amateur's game. I mean, a professional is looking to get within about 20% of the bottom and out within 20% of the top. And being a commodities guy most of my life, and I used to get up every morning at 5 a.m. So when the market's open at 6, I already have my coffee and I'm ready to go because I did trade for a living for a while. And so I'm sorry, it's a senior moment. Anyway, I think there's a lot of momentum to be gained over the markets. What I was saying about, you don't have to catch the exact top or bottom, and that's an amateur's game. And so really as a pro, you can catch the middle or you can wait. I mean, the thing the trend is your friend.
Exactly.
Most people won't wait for the trend. Right. They'll try to pick the top and they'll try to pick the bottom rather than see that the bottom is clearly in and the momentum is clearly up or down, depending on what it is. And that's the trend that's been established. Now you can get on board. Yeah, but I missed the top. So what? Or I missed the bottom. So what? The trend's established. You're a lot safer. And this is the kind of approach I've taken for years, which has saved a ton of money because when you're using leverage, you can make a lot of money. I mean, when I was probably your age, I 1 week I just I'd have a Lexus in my account because, I traded really well that week. And then the next week it's down to 2 Volkswagens. And, it's very emotional until you get established. You know yourself, you know your patterns, you know how to trade. And it's a very much, for me personally, I'm speaking for myself, introspective way. Most people can't trade. They just don't have the emotional stability to be able to do it. They think they do, but when they actually have to do it and have money on the line, most of them fail.
Yeah, it's very different from paper trading in that case. And as you mentioned, David, that's something I always emphasize to people because when you have there's very clear ways you can tell when a market is switching its cycle, when it's starting to enter into a bull phase or a bearish phase. And it's just simply a matter of, again, not trying to time the top because there's a cost to trying to time that top or that bottom that you won't incur. Sure, you might miss some of the profits, but it's so much better to let the market carry its way. That's what I've mentioned, again, as I mentioned with the kind of dichotomy between commodities and equities. I was like, look, the Fed's still doing its thing. So long as it keeps doing that and the punch bowl keeps getting full, it's going to keep going up. But when those rules start to change, when things are finally starting to get shaky and things are becoming more clear, it's like, okay, now we can actually start to get bearish on this. Now I can switch my alternatives to commodities, crypto. And I think that's where a lot of the hedge is going to start to come in. But I absolutely agree with you. I think that's a problem that a lot of people can't get over, and they want to be traders. But if you cannot cut that emotional factor, and if you can't have that self kind of introspective kind of view on what makes you tick and where you might have flaws in your trading strategy, and if you can't correct those, then you cannot be a successful trader. It's a brutal game trying to compete against the algorithms. You'll probably lose out 98, 99% of the time. If anything, I think that's more of an optimistic viewpoint. So, yeah, I mean, we've talked about pretty much all the things I was really interested to talk about, David. I mean, is there anything that you'd want to point people towards? I know, obviously, people should go check out your YouTube channel, as I've watched many videos from there over the past few years. Is there any other good resources? I know you have your energy report that people might enjoy as well.
Yeah, I think that's one for this interview, and that's to get on the free webinar, sign up. It's comingenergyboom.com. Just one word, comingenergyboom.com. And it's back and forth between myself and Manish Bindi, my business partner, going over the sector, kind of a, the overused 40,000 foot view, kind of the top down approach. And I take that on. And then Manish talks about how you could cash flow using strategies that's provided to our subscribers. And then there's kind of a wrap up at the end. So I've gotten pretty good feedback from it. It's free. It gives a good introduction to what we do and how we can help you profit.
Good stuff, David. Well, I'll try to make sure to check it out on my end. If you guys need any extra resources for David's stuff, I'll leave it linked down below in the description. But David, I got to say, look, we not only talked about a lot of great things in the podcast, but I really appreciate your perspective on things, kind of taking a balanced approach, looking at both sides. And it's a big reason why I've been sticking with you all these years. So thanks for taking the time to just talk. And it was a pleasure meeting you.
Well, I take that as a high compliment. I do look at the left. I do look at the right. I'm neutral, more or less. Probably lean to the right. Not that people want to know, but I am conservative. But I'm a liberal in the classic sense. So think about that for a moment. But no, I really do try to look at both points of view. I think it's really totally to at least hear the other side. And I think, getting a bit philosophical, which I tend to do on some of these interviews, is that most people just are not good listeners.
Right.
Because sometimes what people are saying isn't what they mean, because our communication, our language is really, really imperfect. Mm-hmm. It's so imperfect that until I get feedback from you, I don't know if I've actually really communicated with you. Mm-hmm. I know what I mean and I know what I've said, and I presume that you got it. And so I make that assumption, and everybody does that. And if you come back and say something totally off the wall to me, and I now have feedback that you didn't have a clue what I meant, I'll have to rephrase it or break it down differently or whatever. This isn't true in the area that I come from, in the engineering world. When you put a blueprint out for a part on an airplane, you could send that to China, Yugoslavia, France, or Texas, and you're going to get the absolute exact same thing. The language is so precise. It's true in chemistry. When you make a formula up, it doesn't matter where it's manufactured. If you follow it, it's going to be exactly the same. So there is the ability to communicate in, let's say, the science world that is perfectly accurate, where there's no ambiguity whatsoever at all. But in the human experience, there's very little accuracy, and people get an idea of, I don't know what word I was going to use, socialism, so I'll go with it. But, everyone that's thinks they want socialism or likes it or wants to explore it or whatever, I'm trying to be very neutral here, has a different idea of what it is.
Yeah.
So that's right there. We have a major problem, because if one person thinks it's this, the other person thinks it's that, the other person thinks it's this, and that's the way it really is. And so I'm dwelling on this, but thanks for giving me the extra time. One of the main problems that we have in the human experience is our ability to actually communicate with each other. Mm-hmm. It's really, really sad in a way, because we go around half-cocked thinking that we're actually, talking to our neighbors and our friends, and even on the internet, and having this experience. And of course, we're learning from each other, and there is communication, but not to the level that I would love to see, because when you really know what is being conveyed with, let's say in the optimum case, zero ambiguity, think of how much progress we could make then. Mm-hmm. I mean, just, of course, I could go on that tangent. I won't. I just had another thought, but I'll leave it alone. But thanks for the extra time. And I really appreciate seeing people your age that come to the fore, get involved in the markets, and see the ability for to make the world better, and I'm a true capitalist from the sense that you can help yourself and help others at the same time. The true approach to it, and let the market decide if my idea is beneficial to you or not. And if it isn't beneficial to you, meaning to the marketplace, then I have failed, and that's okay. It's okay to fail. You come back with a better idea, or you improve the one you had, and you march on.
Yeah, well, Dave, no, I appreciate the kind remarks, and to what you said, it's very true. I think that's a really touching note. One thing that I always push here on the channel, as a macro trader, you really learn this. You have to view the world in a non-black and white way. I say that a lot. Like, you can't view it as either this or this, and understand that things are very intricate. And like you mentioned, we have to find ways to really break down those barriers on talking about intricate things. And it's a matter, I think, of being really precise with our language. I know, for example, as you mentioned, for example, people can have different perspectives on what you say. I could say, yeah, I'm bullish on, this thing right now, for example, or like XYZ coin, or gold or silver or some kind of stock. And the problem is that I can mean in the short term, I can mean for the long term, I could mean in its fundamentals, and you have to be really precise with it. I think that's something, especially in this day and age, people are very quick to assumptions because we're very wired to kind of have instant gratification, quick feedback, and we break down things in a very compartmentalized way. So yeah, I know we try to work on that at the channel and stuff, and just trying to spend that extra time to be detailed and precise. And I think you guys do the exact same stuff over at your work on the channel. So I appreciate you coming on, man, and providing such good perspective. And thank you for the kind remarks as well.
Oh, you're most welcome, Nicholas. Thank you.
And that's going to be it for this episode of the DashCast. Thanks so much, everyone, for tuning into this episode. And if you liked it, please give a thumbs up down below, as well as a comment as to who we should have on to the next episode. I want to go ahead and give a real quick shout out back again to David for coming on to this episode. It was really nice not only catching up with someone who I followed for so many years, but it's interesting to see someone in the commodity space who's not only interested in precious metals, but also the potential behind energy markets, which has been a fascination of mine for a very long period of time. Our sponsor for this podcast is TaxBit. The 2018 tax season has officially begun. TaxBit automates your entire tax filing process by linking up with your exchanges and wallets, running your transactions through their tax engine, and auto-generating all of your tax forms. 2018 was a tough year for most crypto users. TaxBit will help you recoup some of your losses by producing the tax forms you need to claim your tax refund. Sign up today using the promo code DATADASH to receive a 10% discount and a 100% money-back guarantee that your taxes will be taken care of this tax season.